Hello and welcome to another TLC Tutoring Company accounting lesson. Today we're going to be going over petty cash journal entries. Now keep in mind, if you go to our website, which we will link in the description below, we do have access to Excel spreadsheets and printable PDFs so that you can follow along with this video. So when we're talking about petty cash, we're essentially talking about typically a lockbox or maybe a bag that has a small amount of cash within a business that is used for incidentals. So if the company has to maybe reimburse an employee for a very small expense that they ran out and bought in an emergency, or perhaps if they had a very small expense that they just weren't able to purchase through the normal means and they had to use cash to buy it, this is normally where this cash would come from. So when you're first setting up a petty cash fund, essentially what the company is going to do is write a check to themselves and cash that check. So they're going to be taking money out of their normal cash account, which is normally a checking account, and then going ahead and just putting it into a new account called petty cash. So for this company, it says on April 1st, Dracula Industries established a $100 petty cash fund for the business. So on April 1st, we are going to be having to do two things. The first thing that we're going to have to do is we're going to have to increase our petty cash account. Now, petty cash account is an asset and it's going up, so we're going to have to debit petty cash. Now, the other account that's going to be affected by this is going to be our cash account. So we're literally taking money out of that account that we call cash and we're putting it into petty cash. So cash is an asset. We're decreasing the cash account, so that would be a credit to cash. Now keep in mind, just like I said earlier, the cash account is considered something like our checking account, and then the petty cash account is simply going to be the cash that's held on site at the company. Now, periodically, we're going to have to take a look at our lockbox or envelope or wherever we keep this cash, hopefully a lockbox, and we're going to have to see how much is remaining in that petty cash fund because occasionally it is going to have to be replenished. So at the end of the month on April 30th, the petty cash fund had $13 remaining, so we're going to have to replenish that. The following receipts were included: supplies for $72 and miscellaneous expense for $11. And now we have to reestablish that petty cash fund. So let's start by recording these receipts that we have in the box. When you have a petty cash fund, it's assumed that the accounting isn't done as the transactions occur. It actually is only done once you pull those receipts out of the lockbox. So if we take a look at our little cheat sheet here, supplies, the company purchased supplies. Supplies is an asset. So to make our supplies go up, we debit supplies. Also for miscellaneous expense, to record the expense, we debit. So let's go ahead and debit our supplies for $72 and debit miscellaneous expense for $11. All right, now when we replenished the petty cash fund, and I'm going to skip a line, so a little bit of a spoiler alert. Instead of doing anything with the actual petty cash account, that petty cash account still has $100 in it according to our accounting records. So what we're going to simply be doing is writing a check for the missing amount of cash. So in this case, if our petty cash fund is supposed to have $100 and there's only $13 in the account, then the amount of cash that we are going to put into that fund is going to be $87. So essentially, we're going to be writing another check to ourselves for $87, and this is going to go into our petty cash fund. But while it's physically going into that lockbox, keep in mind we don't actually debit petty cash because during the whole month, petty cash is still sitting there with a balance of $100. We did not do anything to change that. All right. Now, the one thing that you'll notice here is that the total of our debits are $83 and the total of our credits are $87. So we have a little bit of an issue here. And you'll notice that there's a missing $4 balance. We'll do the math just so you can see it. 87 in our credits minus 72 and 11 in our debits, we have $4 missing. So we're going to have a plug in this transaction. So now that we have the $4 and our debits equal our credits, well, what account are we going to be using? And the account that we actually use for our plug for petty cash is an account called cash, short, and over. Now this account is very special. Depending on its balance, it can be either an expense or a revenue. So if cash, short, and over is a debit like it is here, it's an expense. And that is because in this case, we have $4 missing from the account. Or it can be a credit, which means that it's a revenue. And that would mean that there was more money than we expected in there. All right, now that you have a little bit better of a feel of petty cash, please make sure that you keep practicing. One thing to keep in mind, and one very common question that instructors like to ask about petty cash is when you're replenishing the petty cash account, what do you debit? And the answer is typically you debit whatever you spent that money on. So whatever assets or expenses were in that receipt list. All right, so until next time, thank you so much for listening and happy studying.